Hi, thanks for joining my market report. My name is Mike, and this market report is on mortgage rates. We like to get into what impacts mortgage rates on a daily basis, whether if it's something from the economic calendar, if it's something from the headline news, or perhaps some geopolitical. A lot of different things could factor into what drives mortgage rates on any given day, and sometimes they're not logical stuff that will drive it because sometimes the sentiment changes in the markets, and then unfortunately people on the outside don't really realize this and don't understand it. So we're here to kind of get into that information and provide that to you. You're probably out there looking to refinance or purchase, so that's why you're keeping an eye on rates. Well, you came to a great place to watch videos on what's driving mortgage rates on a daily basis, and be able to make a decision for yourself if you're going to want to lock in sooner than later and maybe save yourself a little money for having a short lock period versus a longer lock period. We're here to try to help you guys out. A little bit about myself is I am a loan officer. I do work with a national lender, so we're here to answer any questions that you might have. We can help you guys out with. We'd love to earn your business, so please give us a shout and see how we can help you guys out with your next refinance or your next purchase deal here. Without further ado, we'll start off with the economic calendar on the market report. Every Wednesday, the MBA or mortgage back, or I'm sorry, the MBA basically provides the mortgage loan activity report, and here's the breakdown we got where we saw last week's to this week's. So the purchase loans increased last week, however, refinances decreased last week. So and then kind of in part one, we got the housing starts for the month of October. We saw a dip where previously September's was revised slightly lower from 1.555 million seasonally adjusted analyzed units to 1.53. Forecast will show a pretty big uptick to 1.576. However, it dropped. It went the opposite direction to 1.52. So a lot of this had to do with the current situation with the materials, the costs that are associated with it, and finding labor to help complete these projects. So the housing starts have been kind of slow of late, even though we did yesterday get a increase in the home builders index of confidence level with them. So here's why you'll see that with building permits. These are future housing starts, of course. So September was at 1.586. Forecast is kind of for 1.638, and it came in at 1.65. So again, a much better number there in terms of showing the confidence of that homeowners do feel. They think we'll probably get through the supply chain and labor shortage, and then be able to get back to hopefully some type of normal path and help meet the demand that's out there. Um, Headline news: they're still getting some quarterly reports out there. There's it's been decent, but right now stocks are near all-time highs. So investors are a little bit leery about trying to push this market that much higher right now. That's why stocks, for the most part, are down today. They're not really taking the cue of anything. They're just not trying to over push it right now because we're heading into holiday season. We got the Thanksgiving coming up next week. I think probably they're eating their turkey a little bit too soon, so they're probably getting a little lazy. But we'll have to kind of wait and see what transpires. But the market's starting to thin down a little bit in terms of trading, in terms of the equity trading right there as well. So let's take a look here at the mortgage-backed securities. What's going on here? What mortgage rates are doing? As you can see here, we did start the day lower. Here's where we finished the day right here. We finished higher than we did the previous day, so that helped us out. We were down much lower. And then that was after the retail sales, and then it subsided a bit. And we ended up closing up, I think, about 2 or 3 basis points, which was much better. However, we did start the morning off higher or lower, but since then we've been going upwards, and now we're higher than we were yesterday. And right now we're up about 14 basis points, which is good news, and that will transpire into better pricing today in our rate sheets. So we should find a little bit better pricing in terms of mortgage rates today. And here's how it kind of looked like earlier in the day. As you saw, kind of worked its way up, had a slight dip, worked its way back up, and now we've been kind of going the sideways position right now, sideways pattern here. All right, so here's Treasuries. Let's go take a look at see what Treasuries are doing. Just put that back there. Sorry about that. And Treasuries are coming down. So it broke above this level. It closed up about 1.64. Right now we're just down to 1.60 right now. So it's coming down quite a bit here. Yesterday it was kind of hanging around the 1.62, and then it broke above this level here slightly. It started a little bit higher today, and then worked its way down. Right now we're sitting about 1.60 right now. And let's take a look at the national average for conforming loan limits. Again, these do have points built into them, which is why you're not seeing them in eighths of a percent. So 30 is at 3.27, and the 15-year at 2.65. Again, if you guys got questions about anything we can help you guys out with, please feel free to reach out. We are here to assist you guys. And again, we love to earn your business, so please give us a try. Uh, Also, if you guys like these videos, please slap that or smash that like button. We greatly appreciate you guys help us out with the exposure of these videos, and sign up and follow. You guys have a great rest of your day. Thanks so much for watching. Look forward to see you guys in tomorrow's video. Bye-bye.